Hey everybody, my name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. As always, it's a pleasure to be here with you on this wonderful Thursday morning. Now remember, tomorrow there's a holiday, Good Friday, so the stock market is closed. So today is the last day of the trading week. Now, why is that important? Well, number one, it means that there's going to be some jockeying late in the day with people that don't want to hold over the weekend in case there's some crazy new developments in the trade war, right? On the other side of the coin, there might be some buyers that say, hey, listen, we did see China just in the last 24 hours saying they are willing to have talks with the U.S. if the U.S. is respectful, right? So there's a reach out there. It's the beginning stages. We'll have to see if the Trump administration takes the bait and actually starts some chatter. Now, again, if over the weekend we start to hear that there's meaningful discussions and negotiations, that could be a very bullish thing for next week in the markets, all right, starting on Monday, for instance. On the other hand, if things escalate higher in the trade war, we could see a major down move. So really the point being is that with today being the last day of the trading week, we have to be aware that there will be some people that are saying, hey, listen, I don't want to mess with this market. I'm going to step aside ahead of the weekend. And then there'll be some other people that say, hey, I'm going to cover my shorts because I don't want to be caught off guard if there's some development over a 3-day span. All right, having said that, we did have some economic news here. So again, you have it at the bottom of your screen. You can see jobless claims came in better than expected at 215,000 jobs, basically filings for unemployment. So remember, when it's jobless claims, the lower the number, the better. All right. When it's unemployment or jobs added, really lower numbers are not as good. But for jobless claims, these are people filing for unemployment. So a lower number is a positive. All right. That was versus the 225,000 expected. However, housing starts really bad here. This was much worse than expected. 1.32 million versus the forecast of 1.4 million. We know that the housing market is getting crushed and basically builders are stalling and slowly pulling back dramatically here. All right. Philly Fed was another major factor here. The Philly Fed collapsed to negative, and this is bad, guys. The Philly Fed manufacturing collapsed to minus 26.4 versus an expected 2.2. So plus 2.2 is what was expected versus negative 26.4, which is where we got into things. All right, flipping over to the charts, let's take a look at what we have here. The S&P futures are basically flat to slightly positive. You can see this is where we closed yesterday on the ES or the S&P right here. So we are just slightly higher on the day, but certainly not a big rebound. You can see overnight the markets had rallied to the upside actually pretty decently. But as we've gotten closer to the U.S. Open here of the stock market, we have started to come back in, now just fractionally positive. And I think, again, some of the Philly Fed numbers are probably spooking people. We also have to talk about yesterday's Jerome Powell discussion, right? So Jerome Powell yesterday, he came out at 1:30 p.m. Eastern time. And if we take a look at the charts here, this is really key. Right here is where he started to give his speech. And this was, again, a speech where he talked about interest rates, inflation, and what the Fed was likely going to do. And what we can see very clearly here is that his commentary basically saying, hey, guys, we're not going to be cutting interest rates at any time soon. That tanked the market. And then you had a little short covering bounce into the end of the day. But again, what a sell-off yesterday afternoon in the stock market on the back of Jerome Powell's comments. Now, almost like clockwork, what ended up happening? Well, early this morning, Trump came out and tweeted on Truth Social that basically Jerome Powell was an idiot and he needs to cut rates. I mean, I'm not paraphrasing here, obviously. We can all go look up the exact commentary that was given. But suffice it to say, Trump went at Jerome Powell very, very hard in terms of his wanting Jerome Powell to cut rates and basically saying when he's done next May, his term ends, he is out the door. And again, he is making a major error per Trump by not cutting rates. Now, I would just like to point out to all of us that are intelligent that even if the Fed cuts rates, it doesn't really matter, right? When we go to the 10-year yield, what do we know? Well, look at rates. I mean, rates went up here tremendously, but it wasn't like the Fed was raising rates, right? So again, the Fed can influence rates in normal market conditions, Remember, the Fed deals with the bank lending rate. That's what they set, the bank lending rate there. But ultimately, the markets determine the end game of where rates go. So, like I've said to you 100 times, if the rest of the world says, hey, we're not going to buy US Treasuries, and they step away, then who's buying our debt? I mean, yeah, the Federal Reserve buys some of our debt, but again, that's kind of like taking from, Peter to pay Paul kind of thing, right? It doesn't make a lot of sense in the long run. You need other countries to be willing to buy the US debt. And if they stop, interest rates skyrocket regardless of what the Federal Reserve does. So just keep that in mind. I always think that's an important point to understand because most people think, oh, the Fed controls literally everything when it comes to rates. That is not true at all. Okay. Back to the charts we go. The 10-year continues to sit on major support here. This is a big level to monitor. And needless to say, if we were to see probably a deal with China develop, rates actually would come down on that because it would mean that some of the tensions globally, and my guess part of that deal would be that China has to buy more U.S. Treasuries, which in effect would lower interest rates here in the U.S. And again, I'm obviously speculating that that would be part of the deal, but considering the delocation or dislocation in the Treasury market and interest rate market here, it would make sense that Trump wants rates lower. So his negotiation should be partially to do with how many U.S. Treasuries China is going to buy, as that would help achieve his goal of lower interest rates. All right, next up, the U.S. dollar continues to basically chop sideways down here. And we can see, again, the dollar has dislocated. And instead of going up in times of kind of unease, we are seeing the dollar pretty rapidly collapse, breaking technical support and continuing lower. Now, where would the dollar be expected to bounce? My first level for a technical bounce would be here at around 96.70 on the Dixie. And then another major level would be right here. All right, followed by this area here. So again, these are all levels on the way down that would be support. But again, I would have to determine based on other factors if it would be a buyable opportunity on the US dollar. All right. Flipping over to Taiwan Semi, reported earnings this morning. Now, you would say, oh, Taiwan Semi is up significantly. Well, the aspect of it is it's not really up that much. We see it closed yesterday around 152.25. It's only trading at 155.75. So that's about a $3.50 move to the upside. Essentially what would that be? About a 2% move on the stock. So yes, it's up. The earnings were good, but it's not having the same impact. And this is the kicker here, guys, is that we have to understand that even good earnings from the last quarter are going to be kind of not as big of a deal because everyone's going to say, yeah, but this quarter is when all these tariffs and the trade war really escalated. And so we're saying, okay, well, what about this next quarter? So last quarter is kind of old news, even though that's what these companies are going to be reporting versus the coming quarter. And I think people are saying, well, okay, Taiwan Semi did great in the first quarter, but what about what's going to happen in the second quarter, which is still a lot unknown since it's just the first month of that second quarter of 2025. All right. Couple other things here to look at. If we look at the daily chart on Taiwan Semi, you can see again, I think I love showing these past parallels because we see them so often. And look at what happened when it broke. Look at the dramatic move down in price. So a parallel is a great indicator of a trend in a market. But once it breaks, that's when the floodgates really open. And always remember, folks, upsloping parallels have about an 80% chance of breaking eventually to the downside. All right. A lot of people think, oh, it's a parallel. It could break to the upside or it could break to the downside. That's true. A few times, 2 times out of every 10, let's say, it breaks to the upside. But more often than not, by a huge margin, there's a breakdown. Now, the key is, again, looking at the chart and saying, okay, well, when does it break down? How did we know it wasn't going to break down here or over here or over here versus all the way over here? And the answer is what you do is you have to understand that it's dependent on how many times it hits. This is the kind of the doorway analogy that I always like to talk to you guys about. If you have a trend line of support and you take a trend line, the first hit, it almost never breaks down on. The second hit right here, very rare. The third hit, very rare. By the fourth hit of the trend line here, there's about a 50-50 chance that it bounces or it breaks down. If it doesn't break down, the fifth hit has now about a 60% chance. And essentially the point being is that every subsequent hit increases the odds that eventually it breaks down. Starting at around the fourth hit is a 50-50. So what you can do is you can say, okay, let's say here's your beginning, first hit, second hit, third hit. These are very unlikely breakdowns. Probabilities don't favor that. Here's your 50-50. Here's your 60-40. Here's your 70-30. Here's your 80% chance that a breakdown is going to occur, and it starts to break down. So in your methodology, as you guys are creating your trading methodology, the one thing I always do is when it's the first, second, or third hits, I'm almost always going long off that trend line. By the fourth hit, I stay on the sidelines, and then I wait and I kind of say, okay, maybe the fifth hit, I start a small short. Sixth hit, I add to it. Seventh hit, I add to it. Boom, there's your breakdown on the chart. And again, that's a very key piece of methodology that I teach in the Winning Trader series that, again, is so influential in my trading and ability to help me predict when breakdowns of channels or trend lines will occur. Okay, so again, very important there. But point being is that we've had a big drop, small bounce today, but nothing to write home about in terms of the earnings. Now, this one's a big one, guys. UnitedHealth getting crushed on earnings. Take a look at that drop. They missed earnings, they missed revenue, and they got lowered their guidance. The stock dropped 20%. It was equal to about 700-point drop in the Dow, just this stock alone. Now, you might say, wow, how does one stock drop the Dow 700 points? Well, this is the kicker, and this is why I don't use the Dow. Like when someone says, oh, the Dow was up today, or oh, the Dow was down today, I say, well, who cares? What's the point? Like all the Dow has is 30 stocks in it. 30, that's it. And then it's basically price cap weighted. So if a stock hasn't done a split and it's at $1,000, it's going to have a much bigger weighting than a bigger company that's at $100 that could be $1 trillion company. Like Apple Apple in the Dow has a lower weighting than UnitedHealth because Apple's stock price is lower, even though Apple is essentially a $3 trillion company versus UnitedHealth is a much lower company. So the point being is when you do price cap weighting and it's only 30 stocks, a stock like UNH can literally drop that index massively. Now in the S&P is still net positive even with UNH dropping 20% because there's 500 stocks in that index and it's market cap weighted, which means Apple would naturally have a higher market weighting in the S&P than a UnitedHealth. So again, it's kind of like the old school. If you talk to the older generations, when I was growing up in my very early years, it was like, well, what did the Dow do today? What did the Dow? Now, real investors are like, well, what did the NASDAQ and the S&P do? Those are the ones you want to follow for a general better barometer for the overall stock market. All right, let's get into this chart here. We have it trading. It is getting a little bit of a bounce here, but we're trading around that 485 level. So here we can see this is your pre-market where it was, but remember, it was all the way down here. A couple levels I'm following for trading today. I'm using my fibs. Okay, the fibs, you have the 786, but we're basically just above that, and we were below that. The 886 I don't have on this tool, but it's right down here at around the 457 level. So 886 is the first level I'm going to be watching. It has not been hit pre-market yet. So that, again, is the first level right there. And then your double bottom for a trade today at around 440. So 457 right here, which is the 886 Fibonacci. And then this level at 440 are going to be my 2 day trading levels that I'll be monitoring for potential trading today. All right. So again, we'll keep our eyes on that. Now, some of you might say, well, is this a good long-term investing opportunity on UNH or even swing trading? And what I would say to you is this. Listen, obviously, each and every one of us are big boys and girls. We make our own decisions. But for me, I can speak for myself. And what I say for myself is I'm going to let the dust settle. We are no longer in a bull market where every dip is being bought. Case in point, look at Decker. Decker, this reported earnings right here. All right, this was the drop on the day it reported earnings. Look at the stock since then. It has done nothing but basically go down. Did hit support right down here and got a little bit of a bounce. But my point being is that just because something's down 20% does not mean it's a great buying opportunity anymore in this market environment. If this was a year ago, yeah, you'd probably be buying UNH for a swing trade bounce or even an investment, right? But in this market, at least for me, I'm stepping back and letting the dust settle before I jump into opportunities out there and looking at the technicals for multiple days. Tesla today is basically flat on the session or slightly positive. I haven't gone over this chart in a while, so I know a lot of you guys love looking at the Tesla chart. This was your level of support that I've been loving for a while. So far, it's held. Just be careful. If this line breaks, this is your next buying opportunity. At least for me, this is where I'll be looking. You have this pivot low right here area, and then you also have a bigger, longer-term trend line. Now, let's just focus on this trend line. Now, remember when we just went over hits of a trend line. So the point being is, what number hit would this be if Tesla were to dump into this level? It would basically be your third hit, right? 1, 2, 3. So in the methodology, would this dictate that we would buy it off that level, or would we stay away from it? And the answer is third hits have a very low probability of breaking a major trend line. And this one would be considered major. It goes back to the low 2023, connects through the low of April here, 2024. And again, this hit around 170, 169 would be your third hit. So the idea is that for me, this would be a hit. What about the next time down? Would I play that? And for me, at least, the next hit of that line would be your fourth hit, which again has a 50-50 chance of breaking the line. Now, for some of you, maybe you guys are bigger gamblers than me. I'm not a gambler. I want probability in my favor heavily. So for me, I would not play that next hit because it's 50-50. I mean, if I want 50-50 odds or about 50-50, I'll go to the casino, play some blackjack, right? You get almost 50-50 odds there. Plus, you get some free drinks. You hang out with your buddies. It's a lot more fun than putting yourself behind a computer and just saying, okay, I got to make a decision here, and this is going to cost me or make me money. So for me, investing, trading is not gambling. It's essentially, I want to be the casino, not the gambler, right? And therefore, I would personally avoid the fourth hit on Tesla. But the third hit, heck yeah. I mean, assuming it comes straight down and comes right into this level, that would be a nice opportunity for a bounce there. All right, Palantir is another one you guys love. So Palantir, we can take a look at this chart. Major upsloping trend line. Let's do analysis on this. And I love having this theme today of going over a tactic. 1, 2, 3. Did we expect a bounce there? I mean, it opened lower, so it was kind of scary, right? But look at how this technically was your third hit. And look at what price did. It rallied up off of that level. Now, listen, remember, there's still a small probability that it could have broken. And that's why you always have to have a stop out situation. Like, where is my exit strategy if the small probability turns out to be what ends up happening? But again, 1 hit, 2 hits, 3 hits, there's your bounce. Now, if it comes down again, do I want to play that? At least for me, there's a 50-50 chance of it bouncing or breaking. So for me, I would stay away on that setup on Palantir. But you guys are seeing what we're doing here. Now, having said that, you have another trend line right here, right? So we have a trend line right here. Now, this would be, so let's say it comes down and it flushes right through this level and it goes into this level here. The question would be then, okay, do you play it there? 1 hit, 2 hit, I would play it for a quick bounce, but where would I be looking to take profits, right? So let's say price falls here and bounces. Where would I look? I'd look right here to exit my trade. So basically, let's say an entry around 67 bucks, around 76 or 75, I'd probably exit and take profits because it's now coming back into resistance, which would be a retrace to the scene of the crime. And then if it comes down again, it has a 50-50 chance because it would be the fourth hit of breaking that line and going lower. All right. You guys see how this is kind of working out? Very cool stuff, actually, as you start to learn about probabilities and how things trade. And I kind of have gone off on tangents today in terms of education, but honestly, I think it's worth it. I mean, this is the stuff that will make a difference for the rest of your life in your investing and trading if you learn this stuff. And again, we have Investor Empowerment Day in about 2 months, guys. And I'm going to be knocking 50% off on the Winning Trader series. So again, if that's going to be your time to pick it up for sure, to learn this and about literally it's 20 hours of content in that course. It's incredible. It's everything I know up here in that course. All right, let's get into Bitcoin. I don't want to run out of time here. Bitcoin continues to trade bullish consolidation. I would still have a short-term bullish bias, at least to 88,500, maybe to 92. But look at that beautiful bullish pattern here. Breakout above the trend line. By the way, look at all the hits. 1, 2, 3, and then you didn't really hit there. 4, Didn't break on 4, didn't break on 5, finally broke on 6 right here. Okay. But again, you could see how, again, especially 1, 2, and 3, look at the rejection off number 3. And then you have to be a little bit more careful over here. And there's your breakout finally. And then here, again, upside resistance right into that range. So you can start using this on any chart, guys. Crypto, commodities, Forex, stocks, you name it. It's all around. All right. Gold. Gold is pulling back a little bit today, only a 0.5% pullback. I still think there's a chance that we could still be headed up to about 3,400. But again, that is going to be a major resistance. It is very close to that. In the overnight, it got very, very close. Didn't quite get there. We are seeing a little bit of a pullback in gold, but that's kind of my max move. Look at the two parallels. You have this parallel through these lows and then this longer term parallel going right through these lows here. Very, very cool to see two parallels. X marks the spot. That should be epic resistance. I also took note of a lot of the comments that were saying, oh, he's crazy to be shorting gold. That actually is a great indicator. It's one of my best indicators of being right on a pullback scenario. Maybe we still have to hit 3,400, but it tells me that there's too much bullish sentiment via comments from the retail public that are now kind of switching into that overly bullish, and almost always, I'd say about 80, 90% chance that you'll get a pullback. Now, again, where's the pullback going to take you? I still think longer term gold goes higher, but I still think you could be due for as much as a pullback to 3,000, which would be over 10% on gold. Silver, let's take a quick look at silver here. Silver on the daily chart is pulling back. Look at this. Broke above the level, and now so far this is a little bit of support. Now, the one thing I will say, it never confirmed above the level, so it's not a confirmed breakout. So I would not be a buyer up here of a breakout. No way, especially without confirmation and bullish consolidation. But right now it's holding that trend line after breaking above it, coming back in. We can see how that is holding above. Oil today, oil is creeping higher, still bearish consolidation. But remember, bearish consolidation usually goes sideways to up. And I've talked about this as being your target. So that's what I'm looking for. I still think 65 to 66 is where we could head before possibly seeing more downside. And then natural gas has really gone to sleep over the last few days. It is slightly below this level, still unconfirmed, though. It is not a confirmed breakdown, so be very careful. They could rip it up very quickly. In addition, you do have inventories today at 10:30 on nat gas. All right, guys. So listen, this has been a wonderful session. I love these. It's almost like a webinar of a crash course in trading, analysis and technical analysis. And as always, I try to cover charts, trading opportunities for the day as well. You guys are amazing. Thank you for all your support. It means the world to me. It drives me to do these every single day and educate you guys. I appreciate the kind words in the comments and your support for verified investing. You guys have a good one. Take care.